Welcome to Talk Tickers. Today, we are digging into Allegro's latest earnings. And honestly, it's a bit of a head-scratcher. They just reported a strong second quarter, beat expectations. So why on earth did the stock fall? Let's break down their September 18th call and find out. So on the surface, everything looked great. I mean, the company delivered a really solid quarter. They came in ahead of what all the analysts were expecting on both revenue and their adjusted profits. A clear win, right? Well, here's where it gets weird. The stock actually closed down over 1% on the day of the announcement. And what's more, it did that on trading volume that was way higher than usual. So people weren't just sitting on their hands, they were actively selling. Okay, so what gives? What did the market see that it hated so much? Let's really get into this because this gap between the shiny results and the market's reaction, well, that's where the real story is. Something under the surface is clearly spooking investors. All right, first things first, let's just lay out the headline numbers. This sets the stage for the whole debate we're seeing play out with the stock. Now, just take a look at this. On paper, it's pretty much a perfect report card. Revenue up 10%. Adjusted EBITDA, that's up a massive 20%. Both of those are solid beats. Even their GMV, that's the total value of everything sold on the platform, came in right where Wall Street thought it would. So it all brings us back to that big question, why the sell-off? The answer, it turns out, isn't in these numbers, but in how they're made up and the risks that lie ahead. See, to really get what's going on, you have to understand where that growth is actually coming from. This wasn't some uniform company-wide success. It's really a tale of two very, very different businesses. First, you've got their core business in Poland, and man, that thing is an absolute powerhouse. Their GMV there grew by nearly 10%. To put that into perspective for you, that is more than double the growth rate of the entire retail sector in the country. They are just crushing it and eating up market share. But, and this is a big but, all of that incredible strength was being dragged down by the international side of the business. GMV there was down almost 8%. Now, management is saying this is all part of the plan. They're still trying to fix the old mall group business they bought. But it's still an ugly number that's offsetting the great news out of Poland. So how does the new CEO plan to deal with this? What's the strategy for growth? Well, he's rolling out something he calls accelerated evolution, and it signals a pretty major shift in their thinking. And there's the man himself, the new CEO, Martin Kushmir. When he uses a phrase like that, accelerated evolution, he's sending a clear message to the market. We're not sitting still. He's looking to get way more aggressive, lock down their number one spot, and find brand new ways to make money. And here's what that plan actually looks like. It's not just one thing. They're attacking from a bunch of different angles. Pushing into new categories, trying to become the main gateway for big international brands to enter the region. And this part's really interesting. They're thinking about taking some of their awesome internal tech, like a Lengropay, and turning it into its own business. It is a really ambitious vision. Operationally, the big story is all about control, specifically control over their logistics, getting packages to your door. They're now managing over a third of their deliveries themselves, which is a huge jump. And by partnering with guys like DPD, they get access to a massive network of parcel lockers without having to rely on just one company. And get this, the CFO said flat out that every single delivery they handle themselves is cheaper. That's pure gold for their profit margins. Okay, so let's circle back to our main question. If the core business is firing on all cylinders and the new strategy seems solid, then what is holding this stock back? What are investors so worried about? This slide pretty much sums it up perfectly. It's a classic tug of war. The bulls, the optimists, are looking at the amazing execution in Poland and the fact they raised their sales forecasts for the year. But the bears, the pessimists, are laser-focused on a huge legal risk, the fact that profit guidance didn't get a bump, and hey, let's be honest, the stock was already up almost 30% for the year. So let's talk about that legal risk. It's the elephant in the room. This is all about an ongoing arbitration with InPost, their biggest delivery partner. InPost is basically accusing Allegro of unfairly sending packages to other delivery companies. The problem is, nobody has any idea how this will turn out. And that uncertainty is like a giant storm cloud hanging over the stock, potentially messing with their future costs. Investors hate that kind of uncertainty. So, you've got strong operations on one hand, a big legal risk on the other. Where do we come down on all this? Here's our official call on the stock. We're initiating our reading at market perform. Look, The company is doing a fantastic job in its core business, no question. But we think all that good news is already reflected in the stock price. And that InPost issue, it's just too big of a wild card for us to ignore. It really justifies staying neutral for now.
So how could you actually play this? Well, here's a trade idea we've been kicking around. Our guess is the stock is just going to tread water until we get a final answer on that legal case. So the trade is what's called a pair trade. You buy Allegro stock, and at the same time, you short InPost stock. This move basically isolates the arbitration factor. It's a direct bet that Allegro's business performance will win out over InPost's legal claims, and if you're wrong, the short position helps protect your downside. Ultimately, it all comes down to this one thing. The single most important catalyst to watch for is any news on that InPost arbitration. Will a resolution, any resolution, finally unlock the stock's potential and let it trade on its strong fundamentals? Or is this cloud of uncertainty going to keep weighing it down? That is the question on every investor's mind.
And as always, this is not financial advice.